Hello, I'm Ron Wilson. In this month's news, the federal government has finally gained Senate approval for the first phase of its 10-year enterprise tax plan proposed in last year's budget. The Productivity Commission has released a draft report on alternative superannuation default models for consultation. The RBA left the cash rate unchanged at its April meeting, noting that an improvement in the global economy had provided a boost to Australia's national income via higher commodity prices. And in international news, US consumer confidence has continued to rise, hitting its highest level since 2000, despite recent weaker job gains. Michael Pollock has the details.
In late March, the Senate finally gave the go-ahead for the first phase of the government's 10-year enterprise tax plan proposed in the 2016-17 federal budget. Treasurer Scott Morrison described it as Stage 1 of the plan. Companies with up to $10 million in annual turnover will receive a cut in the company tax rate from 30 cents to 27.5 cents in the dollar this financial year. For companies with annual aggregated turnover less than $2 million, the tax cut is smaller, as the current company tax rate is only 28.5%. Under the amended legislation, the cut in the company tax rate to 27.5% will be extended to all companies with annual turnover of less than $50 million within 3 years. Companies with up to $25 million in annual turnover will enjoy the tax cut in 2017-18, while those with annual turnover up to $50 million will receive the same tax cut in 2018-19. The government still wants to reduce the tax rate for all companies to 25% by 2026-27, as originally announced in their 10-year enterprise tax plan. But it has so far been unable to get this full cut through the Senate. The Minister for Revenue and Financial Services, Kelly O'Dwyer, has appointed Deputy Chair of the Victorian Funds Management Corporation and Director of the RBA Payment Systems Board, Catherine Walter AM, as the Chair of the new Financial Advisor Standards and Ethics Authority, or FASIA, which will commence operations on the 1st of July 2017. O'Dwyer said the FASIA Board's initial priorities will be ensuring the authority's financial viability, setting its strategic objectives, and approving the advisor education standards, the exam, and the model code of ethics. The Productivity Commission released a draft report on the 29th of March 2017 entitled Superannuation Alternative Default Models for purposes of industry consultation. In the report, the Commission proposes a structural change that would mean employees become default superannuation members one time only, when they first enter the workforce. This would substantially reduce the current proliferation of accounts created by repeating the default process every time a worker changes their job. The Commission argues that to overcome the superannuation system's propensity to create multiple accounts, members who do not exercise choice should be allocated to a default product only once. The US labour market recorded a smaller than expected gain of only 98,000 in March, which lowered the 3-month average gain to 178,000 jobs. However, the jobless rate fell to 4.5% from 4.7%, the lowest rate for almost 10 years. Any figure below 5% is considered to indicate full employment. Aberdeen asset management investment strategist Luke Bartholomew said the decline in job creation was another sign of a pretty tight labour market. The slowdown in payroll growth is exactly what you would expect when the economy closes in on full employment, he said. Meanwhile, the Conference Board Consumer Confidence Index jumped in March to 125.6, which exceeded market expectations and was the highest recorded level since December 2000. As part of the latest update to its retirement standard, ASIC released new figures indicating that all retiree couples relying on the private rental market for accommodation in an Australian capital city, and even single retirees in Sydney, now need more than $1 million in retirement savings to enjoy a comfortable lifestyle. ASFA CEO Dr. Martin Fay said single or couple retirees renting in Sydney, that is retirees without a debt-free family home, were at a distinct financial disadvantage and would need about $1.05 million and $1.17 million respectively at retirement to reach the ASFA comfortable standard. Fay said this compares to $545,000 for a single and $640,000 for a couple who own their own home. The RBA once again decided to leave interest rates unchanged at its April meeting in response to seeing little change in underlying economic conditions since its prior meetings. In his accompanying statement, RBA Governor Philip Lowe noted that global trade and industrial production had picked up globally, whilst labour markets had continued to tighten in many countries. This improvement in the global economy had in turn provided a boost to Australia's national income via higher commodity prices. On a less positive note, Lowe made specific mention of the softening Australian labour market, with unemployment rising and wages growth remaining slow. However, he went on to say the various forward-looking indicators still point to continued growth in employment over the period ahead. APRA has announced additional supervisory measures to improve the quality of new mortgage lending and, in particular, to moderate the growth of investor lending. APRA informed all ADIs in March that, among other measures, it expects them to limit the flow of new interest-only lending to 30% of total new residential mortgage lending, manage lending to investors in such a manner so as to comfortably remain below the previously advised benchmark of 10% growth, review and ensure that serviceability metrics, including interest rate and net income buffers, are set at appropriate levels, and continue to restrain lending growth in high-risk segments of the portfolio, such as high loan-to-income loans, high LVR loans, and loans for very long terms. ASIC has announced it will commence targeted industry surveillance to examine whether lenders and mortgage brokers are inappropriately recommending more expensive interest-only loans. With responsible lending a key priority for ASIC, it voiced concerns about many lenders, including major players charging higher interest rates for interest-only loans compared with principal and interest loans. ASIC reminded lenders and brokers that they must ensure that consumers are not provided with unsuitable interest-only loans. ASIC will collect data from large banks, other banks, mutual banks and non-bank lenders via its compulsory information gathering powers to identify those lenders and mortgage brokers who may be recommending high numbers of more expensive interest-only loans.